All right, right now let's take a look at stocks because they're back down after being down and then up and then back down because nobody knows how this trade thing and tariff discussion this week is going to end, right? And nobody really knows how it's beginning either. We started out this morning with the article for Bloomberg that said that China was narrowing the scope of that discussion. And then there were headlines out of Fox Business that said that maybe there was progress towards negotiating a deal that was confined within the things that they had said they were going to confine to talk about. All right, so basically, good luck if you're trying to figure out how the market is going to respond to trade, because in order to figure that out, you got to know what the trade situation is going to be, and nobody knows. So clearly, there's a lot of sensitivity around this topic when it has the ability to pop S&Ps 20 points and then send them right back down, or whatever our midday move was. Right now, we're down about 9 points. But it's been a little bit of a swingy session so far to start this week. After last week's soft economic data ended with a mixed employment report, and equities pretty much close to it, still down on the week, but making back a lot of ground. So here's where we are today. Let's get an update. Check out gold. We've been talking about this a lot. Gold and bonds. Obviously, if you've been watching these programs, you know that I think these are two extremely important asset classes to watch, given that they have been such consistent winners throughout the year, especially up until their highs here, obviously, that came in late August, early September. TLT is actually down a little bit today. Bonds still haven't really gotten a lot of bid. In fact, gold at one point was down 1% today, and it continued dropping on the positive trade report, then made back some ground on the report after that said, oh, hold on a sec, there's not that much progress going on. So the correlation between bonds and gold now has actually dropped a little bit after staying very tightly correlated for a long time here throughout much of the summer, and of course we know the lead up into this as well. So look, you've got a situation here where we know the market is expecting the Fed to come back, cut rates one more time now. That's the information we got last week on the bad data. And with that bad data, we still haven't gotten new highs in gold, still haven't gotten new highs in bonds, and throughout all the whipsaw today for stocks, they've both just been lower. So keep an eye on it. Pretty interesting. Right now, check out stocks on the thematic front. Low volatility is also under a little bit of pressure today. Not much, but the point is that this market today has a lot of different mixed things going on, but one of the trends, not really a trend, but one of the events kind of happening here today is you've got a little bit of pressure on some of the rate stuff, right? You've got obviously yields coming up a tiny bit. You've got utilities down a little bit, real estate down a little bit as well. So your USMV has been lower, but the momentum ETF I'm looking at right here is still mostly one that's tied to tech, at least the way MTUM defines momentum, which is PayPal, Visa, MasterCard, and the payments are lower today, so that's hurting this ETF a little bit. Let's come back into the movers. A few stock-specific things and a couple other thematic moves. Mentioned retail, XRT is unch right now. Value is doing a little bit better than momentum today if you look at VLUE, but it's the retail names that are really, really beaten up, and I hesitate to really just give them the value label because that's kind of in the eye of the beholder, right? How many of these retail names are bouncing back? How many of them have value to be extracted? That's up for you to decide if you're investing in these, of course. But look at the return so far this year. JW, Nordstrom, and Kohl's, even though they've been getting some strength here the last couple months, the bottom really was in August so far, it looks like, for some of the big retail names. Nordstrom down 30%, Kohl's down 28. Tiffany's still up over the past, or rather on the year-to-date period, up about 9%. So Tiff is trying to hang on. You've overall got some strength and a little bit of bottom fishing going on over the last month here for these names. In fact, what we saw in that September move where momentum dropped real quick and value popped up, that was good for some of these names, and actually it's been holding on a little bit. Keeping that in mind, let's check out what's going on with some of the tech stuff today as well. Software is actually having a decent little session relative to the rest of the market, up 40 basis points. And if you look at some of the highest flyers that did get hit in that momentum quake from September, I know I keep coming back to it in case it's not, completely in hindsight. Some of these companies suggest maybe it's not, okay? Because even though Match is having a nice day on an upgrade, MongoDB is up, and you've got Alteryx. These are the ones that got slammed really hard in September. They're doing pretty nicely over the past couple sessions, but still, since that September 4th, right, that's when we had that yield spike that went on through September 13th, okay? Which which is about right here. But then since then, they still haven't really done much. So they didn't really snap back. You didn't have these high cloud names just rocket right back to highs, right? They're under some pressure. Match is still down 7.8%. I put Match in here because it trades very similarly to a lot of these high growth tech names. It's got a very high multiple and it has been jamming all year. High correlation, as you can see on this chart, with some of the cloud names like Alteryx and MongoDB. Point is, they're all high valuation, big lofty plays in the market. Alteryx is still down 20% from that day. MongoDB is down 13%. Even though software having an okay session here today, especially as we look at some of the gains across these. But come back in, I want to look at what's happening also on the communications front. XLC, your comm services ETF, is doing all right today. You've got AT&T getting a move here post-Joker. All right, lots of people going to see the movie, helps AT&T kind of justify the Warner Media side of it and the content business. But get this, how many people do you think know that AT&T is actually beating Disney on the year to date? Disney is continuing to fade from that big pop that it had. Now it's up 20% on the year. AT&T has actually surpassed it. AT&T is up 28%. So how much is the dividend? How much is the expectation they can make that content work, or that Paul Singer is going to chop up the company or something? There's a lot going on at AT&T, including them getting rid of my built-in apartment utility. I'm upset about this, all right? They're kind of trying to find cash wherever they can get it.